2015 played out pretty much as we expected, certainly in terms of the economics. The liquidity that we've seen in the US, even though they tapered, but we've had general liquidity that's been pumped in the system from Japan, and also with the expectation that Europe does more, has continued to hold up risk assets. And there is a continuation of this search for yield, even though credit is beginning to come under pressure. In terms of the one area we're really happy about our market call was the emerging markets. Been looking for the emerging market stresses to start building, and that definitely happened, and we fully expect that to continue into next year. We've had a decent run. We have been long dollars. We remain long US dollars here as well. I think what happens is the Fed will most likely hike in December, but they risk losing control of the front end, because once you put a hike in, it's very difficult to try and use forward guidance about holding down further rate hikes. So I think there's a chance the dollar strengthens materially, and then that has a feedback loop which continues to slow the US economy, and actually then the economy slows and they don't have to hike much more. So I wouldn't be surprised if they do a December, potentially a March hike, but I'd be very surprised if they do any more than that. And there is a chance they end up reversing course later in the year or even next year. I don't think so. Everyone's looking for the base effects for inflation to pick up quite markedly in both US and Europe. But we all know about the base effects. They're statistical. I think the pulse of what we're seeing is still for deflation across the world. We're seeing more quantitative easing out of Europe, more quantitative easing out of Japan. We're going to see that China is depreciating its currency, the Asian currencies are depreciating, and they're forcing deflation across the world. And I don't think that we're through the middle of this yet. So I think that the pulse is still going to be, even the base effects look like inflation's picked up, I don't think that the underlying pulse inflation is going to be something we worry about next year or 2017.